So, guys, what was our previous topic in the fund accounting?
Expenses process methods.
Sorry, expenses. So basically, we
Expenses.
spoke about NAV calculations, right? NAV impact because of
Yes, sir.
corporate actions. Then we
Methods.
spoke about give me a minute. Check the link. No, it's not. Yeah. So, guys, we spoke about NAV impact, right? Because of corporate actions, how the NAV will impact because of corporate actions, and also we discussed the cap stock activities, both income and distributions, redemptions, and we discussed about expenses, how expenses will impact, and also I gave you an assignment for the what is that?
Income, interest.
Yeah, income and interest, right? I hope you have completed that assignment, right? Everyone, has everyone completed the assignment? Yes or no? Hello. Okay, I'll take it as this.
Yes, yes, I take it. I've arranged my head, but I am outside right now. It's not possible to.
So even if you're not able to complete it, let me know.
Okay.
Again, I'll take a session on that and I'll try to clarify.
No,
But
no, I've done it. I've done it.
your part actually, because we discussed about all impacts and I just asked you to complete an income part.
Okay.
It's pretty much easy and just opposite to the expenses.
Yes.
Okay. Okay,
Yes.
guys. Then I'm going to start with the private equity. We are going to enter into the main crux part of fund accounting. Though the coverage of topic is very less when we compare with the mutual funds and the discussions what we have done. We just left with the private equity and hedge funds, but these are very important, the crux topic of the crux of the subject. So let me talk about the private equity. Already we discussed the differentiation between the mutual funds, private equity, and hedge funds. What exactly the private equities will do, how it will do, what kind of investors will invest into this private equities. All these things we discussed, right? Can anyone brief me about private equity?
Private equity is a fund pool of capital that invests in companies
Mhm.
which are privately held and not publicly traded, sir,
Okay. What else?
to get higher returns.
So basically, the private equity we discussed, majorly it will focus on the high net worth investors and where they will directly invest into the private companies. So invest mainly in the privately held unlisted companies with a view to where they can help them to increase the value. Suppose there is a startup company, they will help them to increase the trade sale. I mean, they will improve the brand value of company so that if the value of company is 1 crore, they will try to invest in that company and they will make it as 20 crores business or 30 crores business. Then they will exit from the company, right? That's the purpose and that's the investment strategies normally private equities will follow. That's just one of the investment strategy that private equities follows. And also we have a lot of strategies and also based on the stages of the company. Private equity firm majorly invest in the companies at a various stages of their development. Some companies will invest at the initial stage. Some private equity firms will invest in the middle of, I mean, where we have a high growth rate. At that stage, they will invest where the company is already well established company, in those companies also they will invest. So basically it depends on the stages of a company, they will invest all these investments. And also we discuss how this private equity is different from the hedge funds and mutual funds. Can anyone tell me a few major differentiations between uh, private equity and mutual funds, private equity and hedge funds? How actually it is different from other two funds? Hello.
Mutual funds is a public.
Mutual fund is a
shareholders public ఉంటారు సార్.
I'm asking you the major differentiations. Anyone else? We're almost at the end of the sessions, end of the course, but still you're not able to answer the basic question, difference between a mutual funds, hedge funds, and private equity. Don't you think it's good or bad?
Yes, sir. Mutual funds are the fund which pools money from the retail investors and like a normal network, medium network investors, and they invest that money into the securities market, like investing in stocks and bonds. Whereas the hedge funds are the hedge funds also pool money from the investors. They pool in money from the high net worth investors, and they will invest that money into the risky. They will do some strategies and they will invest in the derivatives majorly. And whereas private equity funds are the funds the same like mutual funds and that these are also pool money from the investors, but the money will be pooled from the high net worth investors and private investors. That money will be invested into the private companies in a separate platform like real companies. Based on the performance, they will be getting a profit or loss.
So that's a basic differentiation between mutual funds and private equity. Mutual fund is money collected from the normal retail investors. Though we have a lot of investors like high net worth investors or something from the mutual funds also, but majorly it has been established for the purpose of normal retail investors. So a lot of investors will be there, and each minimum amount of investment is very less, and risk is very less, and the return also will be very less, and it's open-ended. But private equity, it's meant for the high net worth investors. They will always focus in the private companies. They invest in the private companies at different point of stages. Again, we'll talk about those stages as well. So the minimum amount of investments also will be very high in case of private equities, and it's for the long term nature. That's why always majority most of the private equity funds will be a closed-ended funds. These are like illiquid in nature. Okay, so this private equity is a part of alternative investment. Is a part of alternative investment vehicle. We can say alternative investment. Normally, as an alternative investment, we do have different types of investments. We have a real estate. Real estate is also alternative investment, and we have a hedge funds, and we have commodities. What is commodities? What are the commodities? We can invest in gold, oil, crude oil, silver. These are all commodities. And we have a mutual funds. These are all alternative investments. So, among alternative investments, the private equity is also one among them. Private equity funds. So, majorly these private equity funds will focus on the private companies. They will pool money from the high net worth investors. They will directly invest into the private equity funds, private companies. Again, once they have invested into the private companies, the value of companies will increase. So obviously they will exit from the fund so that they will make a profit. Okay. And now we will see different ways of investing in private equity. How we will invest into the private equities. That we will see here. Okay. Ways of investing in private equity. So the first one is basically they can invest directly into the companies as a private equity firm. Directly they can invest into the private companies. That is one method we have. And they can also choose another method. They will invest through some other funds also. Now we will see how it will work. Suppose we have investors. We have a investors. These investors are like HNIs, high net worth investors. Okay, these are all called high net worth investors. Maybe from the different background and different, at least minimum investment will be more than like 5 million or something. That will be like that. Let's say assume minimum investment will be 50 lakhs. Let's assume this is the minimum amount of investment for the private equity. Okay. Then we have different ways we have in the investment into the funds or maybe the private equities. We spoke about funds of funds, right? Do you remember? Funds of funds.
Umbrella fund.
Yeah, we spoke about the structures of fund, right? So what is funds of fund?
In the one fund, sub fund will be there. Main fund,
So
sub
fund
fund.
of fund is actually pooled fund vehicle. It will collect money from the different funds and it will become a one fund, right? Many funds of funds have a existing relationship with the leading fund managers because all these funds again will be investing in some other funds, right? That's the reason as a funds of fund, the funds of fund will pool as a main fund. Again, different funds like a funds of funds. Two funds of funds will approach the main fund. And this main fund will invest into the companies, private companies. This is one kind of strategy. Basically, two or more funds, or maybe one fund of fund, will invest into the main fund. That fund will go and invest into the private companies. This is one method of investment by the private equity. Directly as a fund, they can go and invest in the private companies. But what actually they are doing? They are collecting money from the different funds. We call them as a funds of funds. Again, they are investing into the fund. They will go and invest into the private companies. Are you guys understanding? Hello?
Yes, sir. Yes, sir.
Funds of funds will also have a fund managers, investment managers. Even this fund will also have a investment manager. These funds of funds will take a decisions on where to invest. Once they found that, okay, I'm going to invest in this fund, we will invest into the fund and we will leave our hands. So this fund manager will take an initiation. They will find the portfolio opportunities and they will invest into the private companies. That is one method of investment. And there is one more method. There will be a single manager. Single manager. Directly they will invest into the fund. So this fund will go and invest into the private companies. This is one method of investment. And we have one more method. That is called, we do not have any single manager funds of funds. Directly we have one private equity fund. Money will be collected from this private equity fund. Directly it will go and invest into the private companies. This is one method of investment. So as a private equity fund, they can choose any one method to invest into the private companies. It's not required to have a specific structure. We have to follow the same structure. It's not required. Depends on our requirement, depends upon the level of strategies. We can choose any one of the strategies and we will go ahead and invest into the companies. Is everyone understanding?
Yes, sir.
Hello? Okay. Now, how actually the private equity fund will work, we'll understand here. How does the private equity work? First, we spoke about investors, high net worth investors. Can anyone name few high net worth investors or maybe the institutional investors? Can anyone name few investors? We spoke about HNIs, right? Who are the HNIs? Can anyone name those HNIs?
Domestic investors.
Yeah,
and
we
foreign
named few,
institutions.
what do you say? We have given few names, right, for the HNIs. Okay, these would be the HNIs. This would be the institutional investors, like that.
Reliance.
Yeah, like we can say insurance companies or corporates, right?
Yes,
So
sir.
Reliance.
Yes,
So let's assume
insurance fund,
corporations,
insurance and
corporates,
pension fund,
pension funds,
mutual
insurance
funds,
companies.
mutual funds,
Yeah, mutual funds. Mutual fund also can go and invest.
hedge funds,
EPS.
Yeah, EPS.
Clear tax.
Maybe the governments, charitable foundations.
corporates.
Yeah, I have already mentioned corporates. So these are all the high net worth investors, right? Let's assume we have this much high net worth investors. They're all going and invest into the private equity fund. Okay, let's assume this is a
Mainly
private
banks.
equity fund. Sorry?
Mainly banks will invest.
Yeah,
Bank.
let's assume bank, corporations, everything is comes under the corporation. Okay, we have a private equity as well. We have a private equity. This is a private equity fund. Okay. How this private equity fund will invest? Let's assume each might have contributed 50 lakhs, 50 lakhs. Definitely it will be in a crores, right? Let's assume each one has contributed 50 lakhs. What would be the total? It's a 350 lakhs. Okay, total 350 lakhs. Now, total private equity fund having how much? 350 lakhs they have a
350.
capital. I mean, the fund they have a 350 lakhs. Now they will go and invest into the different companies. We call them as an investment, right? Investment. Investments. So how they will invest? They will invest in a one company. Let's assume portfolio company one. You know what is meant by portfolio? What is portfolio? What is portfolio, guys? What do you mean by portfolio? General meaning.
Investment.
I'm
Whatever the
asking the general
investments we are
meaning. What is I'm asking the general meaning. What do you mean by portfolio? We have minister portfolio, right?
topics of
The collection of funds.
Minister portfolio. Did you heard about these words? What is portfolio? Portfolio is nothing but group. We have minister's portfolio. What is
Collection
minister's
of
portfolio? Collection of
collection
ministers.
of
Represent a
Group of
person.
ministers will be there in a ministers. That's we call as a minister portfolio. Portfolio of investment
Stock
means
funds.
group of investments will be there.
yes, sir,
There's a portfolio of
financial
stock, group of or a combination of stocks will be that is called one portfolio. That's it. Portfolio is nothing but
Bonds.
group or combination of some
Combination of stock.
something.
Yes.
Okay. Let's assume we have a portfolio A, company A, and we have a portfolio E, B like that. We have different companies. Like that, we have a portfolio B, C like that. We have all this. So they will go and invest in the different companies. They're investing in different companies. It doesn't mean that entire private equity fund should go to the one company, right? There is no meaning or understanding like that. To diversify the risk, to get a more returns, definitely there will be a lot of diversification. In that way, let's assume they have an investment to the different companies. The amount is also different. So these are all part of investments. Is everyone understanding?
yes, sir.
Yes. Yes.
Okay. Now, okay, we have invested 350 lakhs here. Now it has become 600 lakhs. 600 lakhs, right? Our value has increased. We are going to get a profit of 250. But how we will get a profit? Still, we are holding our partnership. We want to sell and we want to exit from the companies, right? We have invested 350 lakhs. Now the value of 350 lakhs has become 600 lakhs. Now you want to exit the fund. You want to exit from the investments. How we will exit from the investment? Can anyone tell me? Suppose I have invested some amount in one company. Let's say Star Health we have. Homeo Star Health or something. So I identified that this company is having a very good potentiality in terms of growth. So I have invested some amount. From 50 crores business to it went up to 500 crores. Now I want to exit from the fund. I want to exit from that investment. But I have a lot of investments in that company. I might have invested 40 crores, but now it has become more than 400 crores. I want to encash that 400 crores. How I will do?
sell the stocks which are holding.
How I will sell my shares? I have a shares yes, which is worth of 400 crores. How I will sell and how I will make cash? Already we discussed this concept. Someone has answered even. IPO, guys, initial public offering. If you want capital, what is the next process? If that much big company, definitely we can go for the IPO. In the IPO, we can issue the shares so that we'll get a cash, right? Is everyone understanding? So those are called exiting the fund. So exit strategies. We call them as the exit strategies. We have IPO. They will plan for the IPO. Recap. They will recapitalize the same amount. Our income
FPO,
will be there.
FPO,
Huh?
FPO.
FPO. These are public companies. Because FPO is something like further public offering. First, you should have IPO. After that, if you are again going for the public issue, that's we call it as FPO.
Yes, yes.
I'm saying these are private companies. As a private equity, they're focusing on the private companies. So there is no even IPO at all. So through IPO, we can get our capital. Okay. So these are different strategies. IPO, we can go ahead and we can sell the securities because it's a trade sale. We can sell our stock. We can sell our stake to someone else. These are the different exit strategies for the private equity. So what? So that they will realize 600 lakhs. So they have invested 350 lakhs. Now they're getting 600 lakhs. How much profit they're getting? How much profit they're getting, guys?
250 lakhs.
257.
250 lakhs. So what they will do? This is 250 lakhs. They will
250
distribute.
lakhs distributed.
Not only 250 lakhs. Initially, they have invested 350 lakhs also, right? The entire amount, 350 lakhs, their initial investment, and 250 lakhs profit. All together will be distributed. That is called distribution. Distributions. Okay. This is the overall private equity structure. So they will collect money from the high net worth investors. They will pull a fund as a private equity. They will invest into the different investments in the private equities and different strategies we have. Just for example, we are talking about private equities, private companies. It doesn't mean that all private equities will focus on the private companies. No, they can focus on the venture capital. They'll focus on the leveraged buyouts. We have a lot of strategies for the investments from the private equity side. Again, I'll talk about it. And once they've invested, if they want to encash the investments, we have different exit strategies like IPO, recap, income, trade sale, all these. Once they have realized the cash, they will go for the distributions. Simply, they will distribute the amount. Everyone understood?
Yeah, Mahesh, what is venture capital?
I'll talk about it, sir. Don't worry. Don't hurry. Hold your wings. Okay. I'll talk about it. Venture capital, leverage payout, all these things I'll discuss about. As of now, is everyone understood?
Yes, sir.
Yes, yes.
Okay. Let me ask this
Hello?
question. Suppose
Hello.
I need a capital of 350 lakhs for this private equity fund. Please keep it on mute. I need 350 lakhs. So should I require the entire 350 lakhs in the first year itself, in the first day one itself?
No.
I need to find out this investment opportunities. I have to invest. So should I require the entire 350 lakhs from the day one itself? Maybe we already discussed, right? The duration of this private equity would be at least for 10 years, minimum at least for the 10 to 12 years like that will be there. The duration of this fund, the tenure
Yes,
of this
sir.
fund will be 10 years at least, more than 10 years also sometimes, 10 years to 12 years like that will be there. Trade life cycle, we call it as a life of the fund, 10 years. So should I require the entire 350 lakhs from the day one itself?
No, sir.
It's not required, right? What should I do? Maybe if you want me to find out the opportunities of investment, definitely it will take a lot of time. It's not something like in one day I can find and I can invest. It's not possible, right? It will take even years also. I need to find out the potential company. Then I have to invest. So to do some research, a lot of research and development work I need to spend. Then only I'll be able to find a lot of opportunities. I'll choose among them which is suitable for my investment. I'll go ahead and choose. So for this investments also, it will take a lot of time. It's not something like it will be done in a first month itself or first year itself, second year. No, it's not like that. It will take a lot of time. Now let's assume first 6 months, first 6 months to 1 year. Let me write in this way. We have total 10 years, right? First 6 months or 6 months to 1 year. 6 months to 1 year. They will find out for the investors. They will look for the investors. Who are the investors? These are all the investors, right?
Corporate.
They need 350 lakhs.
Yes, sir.
So for the first 6 months or 1 year, they will look for the investors. They will provide some memorandum of, we'll talk about this one, the PPM, private placement memorandum. We'll prepare the PPM and we will distribute to the investors. They will attract the investors so that we will take some, commitments from the investors. So all this period will take for at least 6 months to 1 year. Okay, then they will start investing from the year one or maybe from the year two. But this investment period, we call this 6 months to 1 year called as a marketing period. What is marketing period? They have to market, right? Their fund, they have to market. So that's called marketing period. Then for 3 to 6 years or 5 years, 3 to 5 years, they'll focus on the investments. They'll focus on the investments.
Investment.
So they don't invest the entire amount in the year one or year two. The entire investments will be keep on continuing till fifth year, sixth year also. Okay. Then from sixth year to seventh year, they'll get some profit. They will start realizing the profit, right? That is called realization period. What? Realization period. From 10th year onwards, maybe from 8th year to 10th year, they'll plan for the exit. They'll plan for the exit or sale of investments. Exit or sale of investments. Why they have to start selling investments from the 8th year itself? They have a time till 10th year, right? Why can't they sell in the 10th year? Is it possible for them to sell 350 crores, 350 lakhs business in 1 month or 1 year?
No, sir.
No, right? Even if you want us to sell 1 crore rupees worth of house or something, it will take a lot of time. So if they're selling a lot of, definitely they have to plan properly. So this entire period is called life cycle of fund. The entire period is called life cycle of fund. They have to close the fund. So if they want to close the fund, they have to liquidate. That means they have to sell all their investments and they have to realize their cash. Is everyone understanding?
Yes, sir.
So this is called life cycle of the fund. So first 6 months, they'll look for the
In the market.
investors. They will start investing amount. Then they'll start realizing amount. Then finally, they will sell all the investments so that the fund will become a zero. Isn't it?
Yes, sir.
Okay. This is called life cycle of private equity. Suppose, let's assume the cash flows. You know about the cash flows? What do you mean by cash flow? Hello?
Circulation of it.
Cash flow is nothing but moving of cash flow. Coming in,
Circular.
going out. Coming in, going out. That's it. Let's assume we have 350 lakhs, right? As a private equity firm, if you understand the private equity cash flow for 10 years, we have a duration of the fund is 10 years. The life cycle of fund is 10 years. Let's assume we have a 350 lakhs. Okay, 350 lakhs. How this 350 lakhs is flowing into the fund? Can anyone tell me? For the first 3 to 5 years, his fund is coming in or going out?
Coming in.
Already, see guys, as a private equity, forget about this investors.
Going, sir.
As a fund, we got 350 lakhs.
Yes, sir.
Okay. We started investing from the year 3 or year 2. We started investing.
Yes, sir.
In this case, the fund is coming in or going out?
Going out, sir.
Going out, right? What about in the 6th year, 7th year?
It
But-
is coming.
We started realizing some
Yes,
profits.
sir. Yes, sir.
After 8th year, 10th year,
It is all.
we have
all in
realized
the-
everything. We
Yes,
start
sir.
realizing everything, right?
Sir.
Is everyone understanding?
Yes, sir.
Suppose if I put this graph, the line, how the cash will move from a fund and how the cash is coming in, how cash is going out, we can see the curve called the J curve. I'll show you that J curve now. Yeah. Can everyone see this J curve? Can everyone see this?
Yes.
So if you observe here, till year 5, from year 1, year 2, year 3, cash is moving out like this. It's all negative. If graph is below the axis, that is called negative cash flows. That means cash is going out from the fund. Then they've started getting cash from the 6th year. Slowly it has increased up to the top point. Is everyone understanding, guys?
Yes, sir.
So this is
Yes.
called the J curve. It's looking like a J curve, right? So this is called the J curve. So if you get any question about from the J curve, it's all indicating the cash flows of the private equity. It will project the cash flows associated with the private equity investments, because investments are generally made in first 1 to 6 years. Then realizations will occur from 3rd to 10th year. In terms of distributions, income will realize, and finally the entire capital will be realized with a lot of profits. That is called realizations. All this will happen at the year end, 8th year, 9th year, 10th year. That's the reason there's this upwards towards right. This is called J curve. Everyone understood?
Yes, sir.
I can't put that graph here. That's why I'm showing the image. I hope everyone understood about it.
Yes, sir.
Okay. Okay. Now let's understand few more technical concepts in the private equity. Now, here we spoke about this investors. Here investors, we have a private equity as a main fund. All these things we are talking. Is there a technical name for these investors? We're talking about corporate pension funds, and we said investors. What are all these investors? Something in private equity, there are few technical terms. Okay, now we'll talk about those technical terms. So all these investors, we have these investors, right? All these investors are called limited partners. What? Limited
Partners.
partners. Very, very, very important word. Limited partners. Why we are calling it as limited partners? What do you mean by limited? You know this
Certain
partnership.
time.
Sir, కొంతమందినే
Not about the number of persons. It's about the number of, the liability. Limited partners means it's indicating the liability position of each partner. A private equity is nothing but a partnership agreement between whom? Between these investors and between these private equity fund owners, right? Isn't it? What is the partnership agreement? I'll be giving some amount. You're investing on behalf of me, and once you get a profit, distribute the profit. For managing all this, I'll pay you some commission. I'll pay you some fees. This is what we have entering into the agreement, right? So it's an agreement.
Limited means he is limited to that 50 lakhs only. That's why
Exactly.
limited partners.
Exactly. Excellent. So limited partner means his liability is limited to his commitment. His liability is limited to his commitment only. Again, what is his commitment words? Let me talk. As a fund, private equity fund, we need 350 lakhs. We need 350 lakhs. Maybe we have a lot of corporates, pension funds, a lot of people are there. Suppose, let me put it in a different person's names. Maybe LIC is coming and they're saying like, I'll give you 50 lakhs. Pension fund, like say we have EPF, right? EPF is coming, I'll give you 50 lakhs. Insurance company, not LIC, maybe I'll take TCS. Here LIC, I'll take insurance. Like that, few companies and few persons are coming and they are saying like, I'll give you 50 lakhs, I'll give you 50 lakhs. Is that enough? Just word, if they're saying I'll give you 50 lakhs, will that be sufficient to start a fund? Will that be sufficient? How can they trust? Maybe I need capital for the 10 years. It's not something like from the day one itself, I don't collect. Whenever I need capital, I'll collect from you. Maybe TCS company or LIC company might committed, I'll give you 50 lakhs. What if they're not giving? Again, private equity should look for another opportunities, right? Another investors. It's a time taking and also time waste. Isn't it? Are you guys getting the point? If investors are saying, I'll give you 50 lakhs, I'll give you 1 crore, a lot of commitments are they're giving. I'll be contributing this much capital to you as a fund investor. They're giving a lot of contributions. They're saying in a words, will that be sufficient? Yes or no, guys? Hello. Hey,
No, sir.
వింటున్నారా లేదా క్లాసు?
వింటున్నాం సార్.
If they're ready to, if they're saying like where they are going to contribute 50 lakhs each, if they're saying by words, will that be sufficient to start our private equity fund?
No.
No. So
No,
we
sir.
need strong commitment, right? What kind of
Yes.
commitment? Suppose
Sir,
we'll enter into,
limited. Yes, sir.
yeah. So we'll enter
Limited
into an agreement.
investment.
Yeah.
Yes, sir.
We'll enter into an agreement. What is the agreement? You are making a commitment of 50 lakhs. You are making a commitment of 50 lakhs. So whenever I call you, you should be able to pay this 50 lakhs. Maybe first year I'll ask you to pay 10 lakhs. Second year I'll ask you to pay 20 lakhs. Third year I'll ask you to pay again 10, 20 lakhs. So that this entire 50 lakhs I can collect at any time for me. Suppose if you're not able to pay, I'll consider you as a defaulter. I will consider you as a defaulter.
Default.
So for that, what we have to do? Let's enter into an agreement. Let's enter into an agreement that is called LPA, Limited Partnership Agreement. What is the agreement name?
Limited partnership agreement.
Limited partnership
Limited
agreement.
Partnership Agreement. So in this limited partnership agreement, on one hand we have these investors. On another side, agreement should be between two parties, right? We have a limited partners. Who else on another side?
Private equity.
Even for the private equity also, we have a technical word called general partner. We call them as what? General partner.
General partner.
Very, very important. General partner. So limited partners are investors. General partners are, who is the general partner? The fund itself is a general partner. Fund manager, the person who is managing the fund manager is called general partner. So it's a limited partnership agreement between limited partner and general partner. Are you guys understanding?
Yes, sir.
Yes, Mahesh.
So LPA will be between limited partners and general partners. For what? To contribute and also to the liability for the commitment level. So if I'm taking some commitments, these guys are saying like give 50 lakhs, 50 lakhs, they're ready to contribute, right? This is called commitment. What? Commitments. This is the investor's commitment. Once they have committed for this amount, definitely they have to be payable this 50 lakhs to this fund whenever they ask.
Sir, pay చేయకపోతే సార్
They will consider as the defaulters.
అప్పుడు రిటర్న్
Again,
ఇచ్చేస్తారా సార్ వాళ్ళ ఇన్వెస్ట్మెంట్?
Again, that's a different task. Depends upon the LPA terms and conditions. That's the reason we are entering into the LPA, Limited Partnership Agreement. The Limited
Okay.
Partnership Agreement will outline the defaulters, how we need to treat, what kind of penalties we have to impose. Maybe you're not able to pay it. What I'll do, I'll immediately take a loan from bank. I need capital. You all committed like you will be paying 350 lakhs, but you're not paying. What I'll do, I'll take a loan on 350 lakhs.
ఓకే సార్.
Whatever the consequences, you have to pay. But what is the extent of maximum amount that the limited partners can pay? 50 lakhs. More than 50 lakhs, it should not be increased. It should not increase more than 50 lakhs. Up to 50 lakhs, they're able to, they're liable to contribute at any extent, in terms of loss, in terms of investment, whatever it is. Suppose, as a private equity collected 350 crores and they have invested into these investments, they end up with the losses. Let's say they have a loss of minus 600 lakhs. What? Minus 600 loss they have. In this case, what will do?
They will take 350 from the insurance company or corporates, and they'll
Suppose there is a 800 lakhs
then
loss.
also,
In this case,
then also they are limited partnership. They are limited partnership, they will pay that much amount only.
how much this limited partners will pay? Entire 800 lakhs they will pay?
No,
How much they will pay?
350.
350 only, because the liability is limited to 350 lakhs. Their
350.
commitments, they are given a commitment 50 lakhs each. Loss can be anything, or even it can be profit also anything. But we are liable to pay up to 50 lakhs.
350.
Is everyone understanding, guys?
ఎస్ సార్.
Okay, sir. If they are getting a loss, their liability is limited to 350 lakhs. But what about profit, sir? If they are getting 800 lakhs profit, again, is there any cap? Is there any limit on the profits also? I'll discuss later. We have a lot of concepts to distribute the profits as well. I'll talk about it later. But as of now, you need to understand the meaning of limited. Limited partners means their liability is limited to their commitments. Whatever the commitment they are giving as per the LPA, limited partnership agreement between general partner and limited partners, their liability is limited to that extent only. Everyone understood?
Yes, sir.
Yes.
What is their investments? We call them as commitments.
Commitments, sir.
Commitments are nothing but they need to take some assurance from the investors
Yes,
through
sir.
LPA. So once they have committed, is we are assured we can collect money from the so and so investors up to this much. So as a private equity fund, I can do my investments. I can look for investments. Whenever I need capital, I'll go and I'll ask them.
Okay,
Okay.
sir.
This is called
Okay, sir.
commitments. And the commitments are the limited partnership agreement between limited partners and general partner. Who is the general partner?
The
Private
fund
equity.
managers, sir.
The person who's managing the fund on behalf of the investors. As
Yes,
a
sir. Fund
fund
managers.
managers.
Yes,
Understood, right, everyone?
yes, sir.
Yes, very good.
Yes.
So, sir, only limited partners are contributing. General partner not contributing even single rupee. Is it required to contribute from general partner? It seems something suspicious, right? Only limited partners are contributing 50 and they're just managing the fund. Is it not required to done any contribution from the general partner? Do you guys think it's required or not required?
Re-
Which one is best? I
re-
think is it better to
require-
invest from the general
yes,
partner or
sir.
how it will?
General partner is required, sir.
Why it's required?
Sir, the whole fund ని మేనేజ్ చేస్తారు కాబట్టి సార్
Yeah, they're managing
కంపెనీలో
all the
పెడితే
fund.
ఎలా
Is it a mandate
Yes,
to
sir.
do investments also? I'll manage your fund. You are investing 50 lakhs, I'll manage your fund. Why should I invest? Understand? It's not always a mandatory, but still, it's not a mandatory, but still, every general partner will also contribute some amount, very small penny amount. If they're all contributing 50 lakhs, they will also contribute 10 lakhs. That's it. As general partner will also contribute small amount of investments, 10 lakhs. If they're all contributing 350 million, they will also contribute 2 millions, like that. Just for a namesake, they will also come and invest. Because if limited partners and all these investors wants to trust this general partner, some amount should be there from the general partner's side as well, right? That's the reason to build such kind of a trust and confidence. They will also come up with a small amount of investments. Okay?
ఓకే సార్
Is everyone understanding, guys?
ఎస్ సార్
Yes.
So we discussed the commitments, limited partner, and general partner, right?
Yes.
ఎస్ సార్
Then we'll talk about the private equities investment strategies. Tomorrow I'll talk about this private equity strategies. Okay. So here we'll talk about this all venture capital, leverage, buyout. We have a lot of methods for the strategies. Growth capital, buyout, leverage buyout, and also we have mezzanine, and we have secondary funds. These are all the strategies we have. So I'll talk about all these strategies tomorrow. Then we will enter into the few more concepts of the private equity. Okay. Is everyone understanding as of now?
ఎస్ సార్
Yes.
Is there anything difficult in understanding these concepts?
నో సార్ నో
Is everyone understanding, guys?
ఎస్ సార్
Okay. Again, tomorrow I'll ask you all these questions. It's very, very important. You should be able to identify limited partner, general partner. What is the investment? What is the life cycle of fund? What is LPA, limited partnership agreement? All these things you should know. LPA is nothing but an agreement. If you're entering into any agreement between two parties, there should be terms and conditions, right? How much fees I have to pay? You're managing 350 lakhs. How much fees I have to pay? What is the objective of this investment policies? When I'll get return back my money? How I will return back? In what basis you will charge this fees? In what basis the profit will be distributed among the investors? All these things will be outlined in this LPA, limited partnership agreement. As per the limited partnership agreement only, the entire transaction between partners will happen in this private equity. Understanding, guys? Everyone?
Yes.
ఎస్ సార్
Okay, guys. Anything down? Anything else to check with me? Doubts or queries? Hello.
Sir, no, sir.
Okay, let me stop the recording.